Hello, everyone. A warm welcome to Growth Club once again. So, today we are here with a very special gentleman to talk about something very special. We are here with Vinal. Hi, Vinal. How are you?
I'm fine, Dhananjay. How are you?
All good, Vinal. Thank you for joining in with
You're welcome.
Growth Club. So, today with Vinal, we are going to discuss about investments. Now, he's coming from a very solid, well planning background. He is a financial planner. He's into financial planning, if I'm not mistaken. Is that a correct industry, Vinal?
Yes, you could say so, Dhananjay. Financial
Yeah,
planning is what I exactly do.
nice. Okay, so today, ladies and gentlemen, we are going to discuss about the type of investments that you need to make. Now, you must be thinking, what is the first investment that I need to do, uh, right? When I have some extra money or when I need to build some fund, you'll be thinking about the types of investments. So we have got a gentleman who can talk about this because he's a very qualified financial planner, I would say. So he has been in the industry for last 6 years, and he has been a corporate leader for last 20 years, if I'm not mistaken. And he has two global recognitions, that is Million Dollar Roundtable in 2022 and 2023. I'm sure he'll hit in 2024 as well. Is it?
Certainly, Dhananjay. That's all
Yeah,
set.
nice. All right. So, Vinal, just to before we start our conversation, I want to have a little chit chat with you. Actually, we met actually in PAZ, right? About six
Yeah,
years back.
almost 6.5 years ago, 2018 March.
Exactly, exactly. So I joined the Premier Agency Circle a little later, and then you were a well-established wealth planner by then, and then that's how we got to know each other. And then
Absolutely.
yeah, and then we came a long journey, and then we have been speaking to each other to get the advice.
Correct.
Once I wanted to join BNI, and then you were helping me a lot, so you gave
Certainly.
me suggestions, presentations, and then during my training time, we had a lot of discussions, evaluations. We debated, and then we came up with good things, isn't it?
True, true. Very true, very true.
Right. Okay. So, Vinal, ladies and gentlemen, so I'm going to ask a very straightforward question from Vinal because he's an expertise in this area. Vinal, now people are having different opinions when they want to start investing. So, what is the type of investment that we should make first? Let's say I am now started earning, or now I have established myself in a career. Now income is coming in. So, what is your suggestion? What's the first type of investment that we should make?
Dhananjay, first I need to thank you for asking this question because this is a question which many people have misunderstood. The thing is, a lot of people think when they start their careers that what they should be doing is earning more money, right? So whatever they have earned, they're trying to double it. So most of them move on to doing long-term investments, right? So let me make you all understand. That it is very important to be protected. So when I say protection, I am talking about anything that you need, which you can use in an emergency, from an emergency fund to a medical cover. These are things that you need to initially look, because there is no age to fall sick. There is no age to meet with an accident, right? All of us experience the pandemic in 2020. So the people who found it somewhat easy were the people who had saved something, because all our incomes were cut. So there was absolutely no chance for us to cover up our expenses if we did not have something saved. So basically, when I use the word save, I'm referring to the emergency fund. So my suggestion to everyone is look at the protection aspect, which is mostly the medical and the accident cover. And also something I want to mention is critical illness. Just give thought to people who have heart attacks at the age of 20, 25. So no more is this heart attack or medical issues cropping up in the 40s and 50s like it was several years ago. So actually, answering your question now very directly, what is the investment you should do first? My very strong recommendation is you need to be protected before you think of anything else.
Right. I have a follow-up question on that, Vinal. Actually, now you're referring to protection. Now, I think it more as a need than a solution. So, from where can we get this protection? What are the instruments that we can go for?
See, it's like this. When I say protection, it would definitely fall under the lines of either general insurance or life insurance, right? Because protection is something that it will be only available at these two places that I mentioned, and so it's very important that a person not only does this initially, but also does it during their which will help their entire lifespan, right? So what I'm trying to communicate here is, if you give consideration to starting maybe a medical policy at the age of 19 years, right? Certain organizations provide it as long as the person reaches up to 70 years. Certain organizations even go beyond 70 and give it up to 74 years, but those companies don't give it for a period of more than 30 years. So there are companies that give it from 19 up to 70 years, whereas other companies give it up to 74, but the maximum period is 30 years. So whatever it is, you need to start even with a small amount. I do understand a person who is starting his or her career will not be in a position to take a substantial plan. So here again, what I need to communicate is, very simply, you do what you can, right? So, and it is not one policy, because there is a notion among people that you need to, if you have a policy or a protection, that is sufficient for life. No, very simply, what you need to make clear is, you will do what you can, as I mentioned. So every time in life when there is a change, right? It might be a promotion, it might be where you become from a single person to a married person. There is a life change, right? So with that, you need to advance it. So that's when you will be on par with what is required at the point you need it. So I hope I have made it clear.
Yeah, very clear, Vinal. Now, then again, I have another question. Now, I can think like uh, I'm sorry. Actually, so we both are coming from a life insurance background. Now, uh, why not stock investments? Why not savings? Why not FDs? Can't I get this health emergencies covered if I have some savings, FDs, and if I can invest something in my lands? What is your
Okay,
take
okay.
on this?
Right. Okay. So basically, here I would like to answer this question using the financial planning pyramid. Right. So according to the financial planning pyramid, it very clearly indicates you need to be well protected before you think of savings. Right. So why do I say that? Right. The normal notion is, everyone feels okay. They start on a job. They need to save. Right. So they will save for 5 years, right? After they have saved for 5 years, very simply what happens is, if there is a medical emergency, that entire saving that they have done, so they have taken an effort to have a fund built up for a particular reason, right? So that particular reason is all out of the window just because they have fallen sick. So I hope you understand, savings aspect until you are protected does not make sense. Then let me also touch on the investment part, which you asked about very specifically, about the properties and the stock market, right? So these type of stuff don't give you returns spontaneously most of the time, right? Most of the time, these don't give you returns spontaneously. So if you don't have adequate savings, or if you don't have a protection, right, you will have to liquidate whatever assets you have acquired, right? Or whatever you have invested in the stock market. So when you are going to do that, very, very surely you are going to make a loss because you are not going to get what you expected. All right. And also, medical emergency might be, we'll say 500,000, 1 million. So if you talk about land, it's definitely way beyond 1 million. So why are you liquidating maybe 10 million, 15 million just to cover 1 million, right? So it's very, very important that you look at the protection aspect separately, secure your future, because like I mentioned earlier, by signing up for this health plan, you secure your future as well, right? And without your knowledge, you build a fund so that you can utilize the fund that has got built for medical emergencies beyond the age of 70. Because let me also touch on that, which is where we will be living most likely beyond 70 years. Now, this is something that many people don't want to take into consideration. But the reality says that it will happen. So we need to be prepared. So this is all about preparation for the future. A 19-year-old or someone after the degree might be 25 years, 28 years, might feel, why do I need to give so much consideration to something that's going to happen 30, 40 years from now, right? But the reality is you have to decide what you want in your life. For you to be successful, this is important, very, very simply.
Okay. I got your answer on this, Vinay. Now, I have another follow-up question on that. Now, let's say when you invest in these health policies, do we get any money back, or it's just a like payment?
Okay, so the answer to that question is, you have the option of taking a plan which has maturity. You have an option of taking a plan which maturity is not there. Because see, how I look at it, or how I would recommend to my clients is, when you are looking at protection, give your total effort to that, right? If you want fund building, there are many options, right? Most life insurance companies now, having identified this, have come up with separate plans to cover that aspect. But when it comes to investment aspect or return on there are so many options in the market, right? So you need to first secure your protection and then look out wide to see what you want to get, because see, it all depends on what you want to achieve and when, right? With the capital that you have to decide what is the most secure investment, number one, because see, there are many investment options that are available for people to use. Some are risky, of course, return is high. So it all depends on the individual's ability to absorb that risk, because there are people who have basically a limited amount of money, so then they need to be less risk adverse. But there are people who can take that gamble. So investment is on that lines. But before you do that, you need to be protected, because if you are not protected, whatever you have invested and accumulated, you might have to liquidate it once a medical emergency comes, because the medical emergencies are things which don't happen with notice. So it happens unnoticeably. So that therefore protection has to be the first aspect. Thereafter, you will look at different options and select the most suitable option. Of course, sharing my experience, now see, in the life insurance policies which gain a maturity, once you have started on a plan, you're securing the final value. Why do I say that? Because of the protection that policy offers, as well as there is a condition where if something happens to the person who has taken the policy, the life insurance company takes over the responsibility of paying premiums which does not happen with any other investment mechanism. So you are talking about FDs, you are talking about stock market. So these things, whatever you have invested will accumulate, that's about it. But when it comes to the policies that have been taken by life insurance companies, as long as the feature that I mentioned is available, the insurance company will be paying the premiums on your behalf in your absence. So then that fund that you wanted to get, you will be able to get it at least for your beneficiaries. Sorry.
So, yeah, that's okay. So now you mentioned about protection, and then you specifically spoke about health. Are there any other life events that we need to get protection for?
Most certainly, I did mention in the earlier introduction also. You need to look at, besides health and the accident, critical illness, right? Give me a moment to explain the importance of the critical illness, because many people are of the notion that health insurance is the hospitalization cover, right? So what I would like to communicate to people who have that notion is, think of a bypass surgery, a very common occurrence in today's context, right? So you recover from a bypass surgery, you are out of hospital. But does that mean that you will be able to get back to normal life? If the answer is no, who is going to provide you the money for you and your family's existence until you totally recover, right? So it's very important that a person not only has a health insurance, not only has a hospitalization cover, that he or she has a critical illness. That is when we can say that that person has a health insurance, because that person's health is protected during the incident and post of the incident. So the three things that are important is the hospitalization or the medical cover, the accident cover, and the critical illness cover. There is also another area which I would like to touch on. See, today education is something which is of utmost significance, right? Because all of us, you, me, we have children and they are young, right? But okay, people mostly think of building education funds using different mechanisms, right? I will use the examples that you mentioned. There are many people who purchase a land and think that that will accumulate over a period of time and that will be sufficient to pay for the child's education. See, these education expenses don't come in that way, right? Education expenses come, maybe you have to pay the initial registration, then the first year fees, then the second year fees. So with a land, you can't do everything, right? And also the thing is, you need to take some time over acquiring a land. But what I am proposing to all of you is, or what I propose to my clients is, no sooner the child is born, I'm repeating myself, no sooner your bundle of joy comes out to this world, I request the parents to go forward and take a plan which would cover the educational expenses. So then you have as long as 18, 19 years, whichever way you can afford. Because again, I'm going on to this property cannot be purchased for 5,000, 10,000, 15,000 rupees. There is no option whatsoever that you can do that. But you can start on a plan for 10, 15,000 rupees. So it is very important to do this. Why is it important, and what is the benefit? The importance is there is a considerable amount of time to build a fund, and once you have started doing that, it gives you a peace of mind, because you know at least you have made an attempt. Because what happens with many people is, they wait till the child goes to school, or they wait till the child passes the 5th grade. So this is, then they are straining themselves, right? So this is why I see these type of things need to be planned well in advance. So actually, I am a person who conducts a very specialized training for corporates and public on personal financial planning And this is some area that I highlight, which many people have seen value in it. So I would like to share it with this audience as well. So I hope they will also benefit from what I'm saying.
Right. Okay. So, what's your views on emergency funds? Building an emergency fund.
See, emergency fund is the most important thing, right? Emergency fund is important for three reasons. First reason is, we'll say you have taken a medical cover, right? Well, let's go by values, right? We'll say you have taken a medical cover for 1 million, right? Today, if you go to do a bypass, it will at least cost 1.5 million minimum, right? It might differ, but what I'm saying is a minimum figure. So that 500,000, where are you going to take it from? But if you have an emergency fund, then you can utilize that. That is one thing. As professionals, there might be times that you need to take a break, right? Before you change careers, or before for you to complete your master's or PhD or whatever, you might want to take a break, right? So then you need money for existence. So then the emergency fund comes into play. Then the third thing is, like I mentioned at the inception, is during an uncertainty, during a pandemic time, this emergency fund would come in handy, right? So let me take a moment to explain how the emergency fund needs to be built, because there is no point in talking emergency fund without giving a basis. So what I would recommend to every single individual is stick to the basics. How do you stick to the basics? You need to have a proper income expense analysis, right? Because this income expense analysis, expense aspect, right, will be what you will use for your emergency fund. So for example, if your expenses for the month is 100,000, the ideal recommendation is at least you have an emergency fund of 600,000, which is 6 times your monthly expenditure. So that if it's an unfortunate incident whatsoever, as I mentioned, you have some way of, as a fallback, to utilize that money that has got accumulated. But don't stop at 6 months. If you can, move it to 9, move it to 12, because more you have the emergency fund, the peace of mind is far greater. So I hope I have gone into a little bit of details, but I think it's extremely important that you have track of your expenses.
Got it. Got it. Yeah. So it's clear that you need to have an emergency fund. So, do you suggest any like instruments for us to build an emergency fund?
Yes. Okay. A very important question, because see, many people are of the view that you can build an emergency fund using fixed deposit. Okay. I'll be very frank, because this is another area which I'm very clear when I'm speaking, when I'm doing my consultations to my clients. The instrument that I strongly recommend is the money market. Why do I say money market? Because tomorrow, if you need money in the evening, all right, today in the night, if you send an email, right, tomorrow in the evening, money will be in your account. Because in the money market, the interest is calculated daily, right? In the FD, what happens is that interest is calculated for a particular period of time. So today, if you take a FD, minimum period is 1 month. So if you need some money, maybe next Monday, you're going to have a problem, because once you withdraw it, you're going to lose out. So very clearly, emergency fund needs to be built up at the money market. Because see, when I say money market, you can put money as and when you wish and accumulate the fund, whereas in the FD, you have to go into a new FD. So that's a bit of a tedious process in my eyes. So I don't recommend that. But if you want to go for an FD, you certainly can do that on the lines of a particular period. You want to achieve something in 6 months, because I'll also tell you a disadvantage of the money market. Although it is very favorable for emergency fund, The disadvantage is, because I told you you can withdraw when you wish, you use it like a savings account, because it's actually a savings account, right? But then you won't be able to keep money in the account on a long term period if you are someone who withdraws on a regular basis. So that type of money that you want to have in the next 6 months or 1 year, my strong recommendation is move it to an FD, so it will not be touched. But the emergency fund, very specifically, has to be in the money market. There is no other option that I see.
Yeah, okay. So to like people now, this video is like the people who are watching might not have that financial knowledge to understand some terminologies, Vinal. So what are the few examples of these money market instruments?
I didn't get the question. So what you're saying is, how does the money market work? Is that
No,
what
no,
you're
a few
referring to?
examples for money markets.
That is places it's can be taken from. Is that,
Yeah,
or you're
exactly.
referring
Yes,
to particular? Okay, so
places. Yeah.
basically, the places that you could go and check on money market accounts would be NDB Wealth, Ceylon Asset Management, then First Capital. So these are some names that come into my mind, or to the top of my mind. But there are companies. What I would like to recommend to all of you all is, of course, the banks also have money market accounts. The leading banks also have money market accounts. What I would like to recommend to each and every one of you is, like I mentioned earlier, always see what is the going rate and always be within that, because if you are getting a higher rate, that can be a concern, right? So if you are a risk taker, that's your choice. But all I'm requesting you as a financial planner is, always secure your capital. So always ensure to refer the company that you are going to take. It can be money market, or everything else that I spoke to you earlier about also falls into the same category. So this is something that is very important, that you check on who you are going to tie up with, and then move there. But answering your question, these are the three key places that come into my mind, Dhananjay.
Okay, so now I have seen, Vinal, some people are suggesting life insurance as a solution to build an emergency fund. Would you recommend that?
See, it's like this. How I look at emergency fund is on the lines of being able to take the money out in a hurry. All right. So on those basis, I don't recommend life insurance to be an emergency fund. But if you are talking of maybe securing the family in the absence of the breadwinner, then it's a different story, right? There, if I elaborate a little bit, Dhananjay, from my experience, what I have seen is, many people don't understand the exact terminology of this life insurance value, right? How it should work is, you need to, again, I'm going to the expenditure, monthly expenditure. You need to have a mechanism where you get that amount that you had needed for the particular month coming to you on a monthly basis, right? So basically, we'll say monthly expenditure is 100,000, right? You should have a fund of maybe 12 million, which gives you a 1.2 million interest on a annual basis. So monthly you get 100,000. That is when that life insurance requirement will fulfill that need. But still, I wouldn't call it an emergency fund, Dhananjay.
Yeah, I understood. So we have a rapid fire, Vinal. I have a few
Sure,
questions from you to check your taste. Okay.
sure.
So rugby or cricket?
I like both, but I'll go with cricket.
Cricket. Okay. Because your school plays a lot of cricket, is it?
No, I am someone who has watched the World Cup final in '96, so I think there can't be anything more than that.
Okay, nice. Tea or coffee?
Tea.
Okay, with a little bit of milk or just black tea?
Most of the time, black tea.
Okay, nice. Netflix or theater?
Netflix.
Okay, nice. What's the first thing that you do when you wake up?
First thing what I do when I wake up is uh, think of something positive. Let me put it that way.
Nice, nice. Coffee shop or beach?
Coffee shop, because that's what I do most of the time in the morning.
Okay, okay. But you're coming from Mount Lavinia, right?
Yeah, the problem is when things are at your close access. Now I have a pool right outside my room. I mean, since outside my doorstep, but I don't go there, so it's something like that. But you're right.
Okay.
You're right. I should be hitting the beach more, but I hit the
Yeah,
coffee shop.
nice. Nice. Okay. So Vinal, getting back to the topic again, I wanted to ask you about retirement planning as well. Now, in financial planning, one of the major concern is retirement planning, other than child education, health, and these creating emergency funds and all that. So, what's your advice on retirement planning?
See, what I would say with regards to retirement planning is I will be in a position, right? I mean, this again my personal experience is once a person establishes himself or herself, right? We can look at the retirement planning aspect, because see, if you tell a 18-year-old to think about retirement, it might not make sense, right? So how I would see it is, maybe a person who has reached 30, 35 years, who has been at least a good 5 to 10 years in the corporate sector, will will have a clear idea of where he or she needs to end, right? So then what I exactly do is I have a chat with that person to check where or what that person would like to do during his or her retirement, right? Then I would ask them, uh, what type of activities have you done thus far in order to make your retirement a comfortable experience? So then there is always a gap, no, Dhananjay? That particular gap, I will be discussing with the particular individual on how they intend to achieve it, right? Because sharing a personal experience, I had the privilege of guiding a couple to plan their retirement using different mechanisms. So they had got some money through a sale of property, so they had a discussion with me and got my advice. So what I did there was I use different vehicles, because the most important thing in investment is, because see, to have a proper retirement fund, you need to invest it wisely, right? So the saying goes like this: don't put all your eggs in one basket, right? So you need to see when and what you need at a particular period in time, right? Where if I go by the example that I did with these people, they needed a monthly expenditure, all right? They needed to send their child for education overseas, right? They wanted to travel the world. So you need to plug in those requirements along with that investment. So that probably is the best way. To be frank with you, it's a bit difficult to go into telling this is the right way, because this is actually dependent from one individual to the other. So that's how I would answer that question, because this is not something that you can say this is how you need to do it. It all depends on the individual, and that individual's requirement need to be understood by the financial planner, and accordingly the solution needs to be given. But again, I'm reminding the audience that you will have to live at least 20 years without an income, with expenses. Hence, this planning of retirement is of utmost importance.
Okay, now actually, so we spoke about a few areas. First thing is health, and then we spoke about accidental cover, then to child education. We spoke about emergency fund, and then later we spoke about retirement planning as well. Now, if you suggest, let's say, at a glance, I know situations might differ. At a glance, if you suggest health anyway insurance, so accident anyway insurance for child education, what is the instrument that you suggest?
Child education also, I like I mentioned, I strongly recommend insurance because of the reason that anyway, if you put money in a bank account, you cannot take it out until the child is 18 years. All right. The issue with bank account is very simply it will only grow if the parent puts money. Okay, so you will turn back and tell me even for the life insurance policy the same thing applies. What I'm talking is if the parent is not around. Okay, so today
Yeah.
there are so many incidents of loss of life, there are so many incidents of total permanent disability, right? Whatever the situation, bank will not take that into consideration, but the life insurance company would. Hence I recommend life insurance.
Okay. So the next thing, so for emergency fund, you said money market, and for retirement, at a glance, how do you suggest
See,
life insurance?
retirement, it is a combination of several investments, like I mentioned earlier as well, right? You can look at the money market, you can look at FD, you can look at treasury bills, bonds, uh, stocks, real estate. So it all depends on the particular individual and the risk component he or she is willing to take, right? So it's very, very difficult to say this is now. See, for life insurance, very specific. For health, sorry, not life insurance, for education plan, health, very clear, it has to be life or general insurance, right? But when it comes to retirement, there are so many options. So it's up to the client to decide what they are comfortable with. So I can only give options. I cannot tell specifically this is the only thing because there is no logical reason to say that it should be only this.
Okay, nice. I was expecting more of life insurance answers, but you
No,
gave balanced answers. Yeah, you're very.
yeah, I don't believe. I see. Life insurance is only one component of financial planning, so you can't get too engrossed in that because that is not the entire picture, Dhananjay. So that's something I
Yeah.
very clearly practice, and if you check with my clients that I consult, that's very clear. Now, the best example is when this family wanted, this couple wanted me to do explanation for 3.5 hours. Only after the third hour that I even uttered a word about life insurance. Till that point, I was talking about everything else because it's very, very important to give the right significance based on what the client is inquiring. If the client said, Vinal, I'm interested in protecting myself, then yes. But if the client is interested in something else, first you need to allow, you need to give in to what the client wants, and then only you need to educate. So exactly that's what I did.
Okay. Integrity. I think that's the quality all the financial planners need. It's very clear now. So there are a few areas that we need to cover. First thing is health. So as per Vinal's advice, you need to cover up your health and then accident, and then if you have kids, you need to think about child education and create an emergency fund, and think about the retirement as well, so as early as possible, because you can enjoy the fruits of compounding interest. So I have another question, Mina. Now, so in in living, in earning money, we not only have these investments, child education and all that, we have other expenses. We need to worry about our groceries, right? Rent is there, transportation, medical bills and all that. So how do you suggest people to balance their finances to grow?
So it's like this, Dhananjay. To this, what I would use is the budgeting rule, right? So you need to understand that whatever the income you are earning, you need to manage the basic needs within a 50% percentage as long as possible, right? What I'm saying might be tough for people with a few kids, maybe 2 kids, 3 kids, might be difficult to earn 100,000 and limit it to 50,000, taking into consideration all expenses that people have to incur, right? So what I would say is, worst case scenario, you need to keep it at 60%, right? If you can keep it at 50, that is great, but at least you need to keep it at 60. Then what are we left with? We are left with wants, because see, in this very competitive, stressful life, we can't be without having some enjoyment. It is basically not a possible thing, right? So what I would say is, if you're earning 100,000, maybe spend 20,000 on having a good time with the family, at least once a week or once in 2 weeks. Just go out. You don't have to go to a star class hotel or whatever to be happy, right? There are enough and more places that have been started where there is not much of a cost. I mean, if you really want to cut down on your cost, you can even prepare some food from home and take. I mean, I'm telling a situation that can be done, right? I mean, that's very important. Then you're left with another 20%, right? This is the most critical percentage of this entire story. That is the savings aspect, right? Because there are people who don't have an emergency fund at this moment. There are people who have not thought about the future. Then another area which has not got captured is, many people don't give too much attention to loans that they have taken. As a financial planners, this is something I always tell my clients, right? Try to clear off whatever loans you have, right? And live within your means. That if you really touch your heart and see, when you have taken a loan, it's always been to do something that you can't reach, right? So when I say that you can't reach, most of those are things that you do to impress other people. Most of the time. I'm not saying every time, but most of the time. Now, if you say, I'm taking a loan to ensure that my child has the best education, there is some logic in that, right? But if you are saying, I'm taking a loan to purchase an apartment, or taking a loan to buy a vehicle, it doesn't make sense, right? I mean, you don't need to live in an apartment or in a luxurious vehicle. You need not move for you to exist. So that this savings is something that is very important. Similarly, whatever loans you have taken, because see, today the people are listening to this, up to this point they wouldn't have heard about this, right? So they aren't aware. So therefore, what I suggest is, using your savings, try to clear your loans first, because if you don't clear your loans and something happens to you, you're putting those innocent dependents in greater difficulty, because they are mourning your loss and they have to cover up for your loans that you have taken as well. So you need to be a responsible person and ensure whatever you have taken, if at least bare minimum, at least have an asset so that the dependents can liquidate it and clear off the loan if something happens to you. So these are things that are very important. I think I have crossed the line a bit by talking about selling of assets and all, but it's important, Dhananjay. At some point, people need to get that message into their head. So my summary message here is, from what you earn, you need to save, right? No organization is going to give you what you want, right? So you have to basically do what is required to ensure that you have that future planned and for which you need savings.
Yeah. So, and in addition, you can think of a side hustle as well. Uh, like if you don't have
That
enough.
is Dhananjay. Now there are, okay. That's a good question. There are people who have come to the notion to say, I don't want to forego any of my comforts. Okay, to such people, there is absolutely no option, but you have to look at income generation through hidden income sources. See, you have hidden talents, right? Many of us don't know what our hidden talents are. This is the biggest issue, right? The biggest issue is people don't know what they're actually good at, right? They just do what others are doing, right? Everyone is not competent to be a doctor, right? Everyone is not competent to be a lawyer, right? The most simplest example that I would take is, if there aren't people to clean the road, what would happen, right? So that person also probably must be doing something else for existence, right? Because that person is also existing. And the beauty is, those people are happier than people who are in high office. That is the thing. So the issue here is, you need to clearly know what you are good at, right? What you are good at, and you need to do it, right? And when you do that, you will be successful. Of course, the alternative is, if you are not willing to go that extra mile, there is absolutely no option, but you need to cut down on your expenses, or you need to at least reduce your expenses. So basically, adding to what you said, that's how I would interpret it.
Right. Thank you, Vinal. So, for the interest of the viewers, we will. I know we have lot to discuss, but for the interest of the viewers, let's limit this discussion for for this time. Did I ask right questions to have a good conversation, or did I miss anything? You can add
No,
anything.
I think you covered most of the areas. If I can be given the opportunity to make people understand the lifespan of a person, I think that will be also valuable to this audience. Could I get the opportunity to just share with the audience?
Yeah. What we will do is we'll do another video on this, Vinal.
Sure.
So yeah.
No worries. No
So
worries.
yeah, we will finish this video with this content, and then let's talk about it
No
in
worries, no
another video.
worries, no
Yeah.
worries. Because I think we've covered everything that the person needs to know. And
Yeah.
also, Dhananjay, if there is anyone who needs to get in touch with me, or find out more about me, what I would request them is to visit my website, which is www.vinaldisilva.com. And there they also have the opportunity of requesting for a free consultation, because I'm pretty sure many people would have questions. So let them pose those questions to me. But if it does come to your team at Growth, you can share it with me, and I can do the needful.
Yeah. What I will do is I'll mention your website in the description below, so people can
Sure.
check, and then they can reach out to you.
No worries. No worries,
Yeah.
Dhananjay.
So thank you very much, Vinal. With a very short notice, you joined with me with this growth club. So we are planning on doing a couple of more podcasts like this. And unfortunately, I was sick yesterday and day before yesterday. I went out, so because of that, we couldn't do it. So any final thoughts before I conclude
Uh,
the video?
No, I think Dhananjay, you gave me an opportunity of sharing the importance of financial planning, which I greatly appreciate, because my vision to this entire story is, I want to make many people educated about the importance of financial planning, and you gave me that opportunity. So you shall be blessed as well, because this is how we as a country can grow, because every individual needs to do his or her part, then automatically everything else will fall into place. So thank you once again for this opportunity given, which I greatly appreciate. Thank you.
Yeah, there's a saying, no, if you want to go fast, go alone, and if you want to go far, go together. So let's grow together.
Let's grow
So thank
together.
you. Yeah, thank you very much, Minal. So ladies and gentlemen, so that's all about financial planning for today. So we are looking forward to have another video with Vinal. So please don't forget to subscribe to Growth Club and share this video with your friends, and let's grow together. Thank you very much.